Hello and welcome to the weekly commodity market outlook. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. How's it going, Ben?
I'm good, Will, and you?
I'm doing all right. An exciting week of college football and, a good start to the Monday, good weather. So everything's looking up so far.
Well, speaking of weather, I got my Christmas lights put on my house yesterday. I'm
Oh,
I'm one of those that I don't turn them on until after Thanksgiving.
sure.
But if we're getting close to Thanksgiving and the weather is nice, I am putting on Christmas lights because I ain't doing that in 30-degree weather, if
So,
that makes sense.
are you living in an area where, you have neighbors pretty close by, or are you a little spread out?
I've got neighbors, but we're not like on top of each other.
Gotcha. Is there any type of competition when it comes to the lights?
Yeah, I'm smiling because I'm the only one in my neighborhood that puts my own lights on. Everybody else
Wow.
pays to have their Christmas lights put on their house.
So you
So
win by default.
you might sense a little tone there. I feel like I have to, I'm keeping up. I'm young enough that I can't pay to people put lights on my house. So
Yeah, yeah. Well, good on you. So, talking about some bright spots, we saw a couple of bright spots slightly into the market coming into this week. So, I'm going to give a quick recap of what we saw. December 23 corn was flat at 477. December 24 corn also flat at 517. So, corn really holding pat there. January soybeans for 2024 up 18 cents at 13.82. November 24 soybeans up just 3 cents at 13.07 on the week. Soybean oil on a cents per pound basis was up 74 cents, 74 cents, sorry, at 51.54. That was the December contract. Soybean meal by the short ton was up 31.60 at 469.10. December wheat for 2023 up 4 cents at 579. July wheat for 24 down 5 cents at 630. And then that January crude oil contract down $2.52 a barrel at 78.39. So, Ben, what are your initial thoughts? Just looking at this again, strong gains on soybean meal, really flat on corn.
that corn complex probably doesn't truly capture the market movement that we've seen this last week. Down big, last week it's kind of been trending softer. You had a nice little rally here on Monday of this week, so some pretty sizable movements, I guess, in that corn contract. Just to say that week over week it was flat, probably doesn't probably doesn't fully
Get
paint
a
the
get an
picture.
accurate photo. Yeah.
Yeah, yeah.
So, what are your thoughts before we move on just on that soybean meal contract as it continues to go up?
Well, we continue to see that heating up another $32 basically this week per short ton. Still not quite up to that $500 mark. However, we're getting very close to that. I think a couple of thoughts here. The impression up for the last, let's just say, 8 months or so, that as we've seen more crushing come online, soybean crushing come online, that would supply oil to renewable diesel, that would create a culture of rather cheap soybean meal. And so I think, to some extent, the expectations have been banked in that soybean meal prices for livestock producers would become cheaper. And I believe that to be correct. The difference is we've just had such a strong export market for soybean meal this year that's really kind of absorbed all that excess meal that was available, and as a result, we're seeing a little bit higher soybean meal prices than probably what we would normally anticipate. So somewhere down the line, maybe a year from now, might not even be a year, but at least let's say a year from now, I do anticipate soybean meal prices to be a lot lower than where we sit today.
Track back downward there. Well, looking at some of the factors that we're seeing that are currently impacting the market, we did see some key adjustments coming in the November WASDE report, USDA's global supply and demand estimates. So, Ben, as you look through those, first, let's start on the U.S. corn side. We saw, some above expectation numbers come in on corn expectations. What are your thoughts as you see that coming out of USDA?
USDA raised corn and soybean yields. I'll just put those both together. Raised corn and soybean yields relative to what they had printed in the October estimates. For corn, that represented about an additional 170 million bushels of added supply. USDA then tried to work that through by increasing demand for corn, 125 million bushels. So feed and residual use was increased, 50 million bushels. Exports was increased 50 million bushels. A little bit higher corn ethanol, 25 million bushels there. So that kind of helped prevent that ending stocks number for corn from continuing to increase. I mean, it's still, we're still looking at an above 2.2 billion bushel carryout when it comes to the U.S. corn. Or excuse me, 2.1 billion bushel carryout when it comes to U.S. corn. My estimate is 2.2 billion bushels, and I think we still might get there actually. And that's certainly not bullish for corn markets as we look ahead to the next couple of months.
Well, and just looking at that adjustment, they raised the corn production estimate 170 million bushels, and then offset it somewhat with that 125 million of added demand estimates in there. But what about that 45 million gap? Does that really influence the market much?
Sure. Yeah. I mean, it painted a pretty bearish picture, I think, for corn markets, or at least any type of sustained rally in corn due to challenges in South America, right? So the storyline has been due to the late nature of soybean plantings that could impact, that second crop corn planting, which again is like 75% of their total corn production in Brazil. That has been a bullish story, right? Lack of corn production in South America could, rally markets here in the United States. And I think what we're finding is that we're going to have excess corn here in the United States, and that's just not providing the bulls any type of support to move higher.
Yeah, and we've talked the last couple of weeks about that hard ceiling that we saw in the nearby corn contracts setting around that $5 mark, and now it's tracked a little bit down since then. But Ben, you've talked about that dip that we saw coming out last week, and then that rise coming into this week. So what are the factors this week that you saw that return the market back to where it was, and what are your expectations moving forward for corn contracts?
Well, we have seen some demand pickup. I kind of lately it's become a morning tradition to drink my morning coffee, open my email, and see that Mexico has bought more U.S. corn, right? So, I mean, it's kind of becoming almost a tradition of daily demand of U.S. corn to Mexico. And some of that's, Mexico needing the corn. Some of that is maybe pulling forward early ahead of what is potentially going to be a corn dispute with the U.S. and Mexico over GMO corn. Right now, granted, that's a long ways away, and I really don't think that's actually going to end up playing out. But that could be part of this. It's pulling some of that corn demand forward. But when we look and see 10 million bushels of corn being sold pretty much on a daily basis, or 40 million bushels of corn being sold on a weekly basis, that certainly provides some opportunity for a little bit stronger prices. And I think that's what the market saw today, again, after another flash sale of corn to Mexico.
Yeah. Well, talking about that carry out potentially creeping up as we move forward, we saw a little bit of that in the soybean side as well, with ending stocks, possibly going up 25 million bushels with USDA's most recent estimates. So what's your outlook for soybeans as we move forward?
So this one to me gets a little bit more trickier, especially, I'm not necessarily in the game of trying to figure out USDA's rationale for different things, or how do I want to put this, like why they do certain things. I try to look at the whole picture and say, okay, where do I think this goes moving forward? The reason for that, that disclaimer there is I do think USDA does a fabulous job. They're the best in the business. However, for the last couple of months, we've seen them lower soybean demand pretty much as they've lowered U.S. soybean production, saying that, hey, we can't meet these demand numbers because we don't have the soybeans there. Granted, it's only 24 million bushels that they added to the U.S. soybean demand picture. But if that truly was the case, we would have seen a little bit higher demand usage since we had the extra soybeans. If that message over the last couple of months really truly was
untrue,
well, the justification, right?
Mm-hmm.
And so I sit here and I'm a little surprised that we saw 24 million bushels of 25 million bushels of added soybean production, but yeah, USDA kept demand the same, and then that extra stocks just ended up in the ending stocks category. So long story short, I sit here and say this one's a little bit more, a little bit trickier to me, because I actually do think that the demand for US soybeans is strong enough that if any production increases that we see, and this month USDA was saying 25 million bushels, it could be more by the time we get to January. I certainly think that the demand is there to pick up and use whatever we have available. And so I would expect maybe a little bit more soybean demand, keeps stocks low or, relatively tight, and keeps that US soybean price a little bit elevated.
Yeah, well, it was kind of notable seeing that soybean market might not have been as hit as hard as the corn coming out of that report, noting, some of those I guess potential ending stocks adjusting some of that demand picture.
So looking at market reaction, that was the market that people were the most surprised to buy. That's where we saw the biggest change Thursday. However, we've seen the market, completely correct for that and come back, and that's why we saw the week over week, increase in soybean prices.
Gotcha. Well, Ben, as you close out this week and look ahead to what's next, what should farmers and ranchers really be paying attention to?
We're getting pretty close to Thanksgiving, so it's kind of one of those fun times of year. But this week we have the NOPA report that comes out on Wednesday of this week, the 15th. Friday, cattle on feed and CFTC reports. The other thing notable is we've had a week skip here in the U.S. gasoline and energy markets, which include ethanol. The U.S. Energy Information Agency has been updating their data reporting system. So we had a week lag. It was well known in advance, so nothing surprise, but it'll be interesting to get 2 weeks of data next week when we talk, Will.
All right. Always good information from me, Ben. Viewers, listeners, if you'd like to learn more about us, what we do, or our sister program, the weekly livestock market update, you can do so at brownfieldagnews.com. Ben, thanks again. I'm Will Robinson on Brownfield.